Good morning, everybody. Welcome to this Monday edition of My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So Friday was a big day for the markets. We opened sharply higher. The market initially taking that jobs data as a positive, as 3 rate cuts are now penciled in by the Federal Reserve into year end. But then we saw a open higher and a hard sell-off a majority of the day, to the point where the markets, the S&P, had opened at a new all-time high, sold off, and closed negative. And again, if you're looking for institutional selling, that was it on Friday. Not only that, but insider selling, the CEOs, the CFOs, the COOs continue to unload at paces I have yet to see in my career. Now, does that spell doom and gloom for today? Not necessarily, because the buy the dippers are trying to fight back today, lifting the markets up in early trading. Now, one of the things I'm watching for today is once the market's open and we have a little volume in this market, do we see selling pressure from institutions reemerge? We saw it on Friday. Let's see if it comes again today. All right, into the charts we go, folks. As always, what do we have here? We have the S&P futures, which are just gently floating up on very, very light volume. And again, you can see this was Friday. So this is where we opened on the S&P on Friday, right here at 9:30. And then look at the sell-off that ensued. Incredible action on heavy, heavy volume. Notice how by basically 11 a.m. Eastern time, the selling concluded. That's when the volume begins to dry up on a Friday especially. And again, once the institutions step away, what do we know? We know that buy the dippers, retail investors come in and gently buy the market and lift it back up. And really in the overnight, you can see, again, we're just gently in float mode with, again, this general optimism even after, Friday's drop. And just to reiterate what we saw on Friday, we had a jobs report that came in a little bit less than expected. Now, it wasn't a negative number, but it essentially showed that, yes, the economy continues to weaken. I actually thought it was more of a Goldilocks number myself, but the institutions know something that I'm about to tell you, that if you look historically at every big drawdown in the markets, bear markets begin generally to see their downside when the Fed starts cutting rates. All right. Everyone assumes it's when the Fed starts raising rates. It's actually when the Fed starts cutting rates is when the markets begin their decline. So again, we're on the verge of that. In fact, basically just over a week away, about a week and a half away from a Fed rate cut, as assumption would go. And we will see what the markets do into that. All right, back to the charts we go. Let's flip over to the S&P futures and take a look. Again, look at this, guys. This is just, I get giddy when I look at this stuff because it's so cool. It's so unbiased and just raw, and it gets me pumped up because when I have an edge and I can get you guys that edge and just to understand the levels, it's freaking cool. All right, let's go into the charts here. So look at this. So we had the gap up on Friday right here. Where was the low of the day on Friday? Look at that, right to that line. And so we've been discussing how this trend line has been the major trend line for the S&P, where if we break and confirm below it, the markets then have a game over scenario, right? That's where we start to see that downside accelerate. As long as we stay within this wedge pattern, the two trend lines that are converging are called a wedge pattern, then the markets can kind of chop around. And again, same thing. If we broke above it, okay, then you get a breakout, right? Then you get the next leg up. You probably get a short squeeze there. But right now, to watch the markets on Friday open at new all-time highs on the S&P and then sell off and stop on a dime exactly at that trend line is amazing. And then rebound a little bit and close off of their lows. Very cool stuff to behold. So as technicians, we very clearly know that we're just following this trend line, right? We know that this trend line is support, but if it were to break support, that's where trouble ensues, right? And again, you can now say that you've hit it 2, 4, probably 6 times, unless this is considered one hit. But either way, we slowly are getting towards a weakened trend line. And I do expect at some point for this to break. Looking at the QQQ, much the same. We have our larger parallel here. We did close below it last week on Tuesday, but again, never confirmed the breakdown, which can always be a signal of a fake out. And that's exactly what it is as the markets went up until Friday's gap up and then came back in. Notice how the QQQ did not make a new all-time high versus the S&P. Again, that continues to show a little bit of weakness in the tech sector. All right, so if you look at things like the semiconductors, the SMH didn't make a new all-time high. Broadcom did, which was a semi, but it closed at the lows, which is a very bearish signal. NVIDIA is almost 10% off of its all-time highs, right? So again, there are weak signals within the tech sector that are keeping the NASDAQ 100 from outperforming like it has historically, versus the money flow has slowly been rotating into the S&P 500. All right. Speaking of which, I just want to quickly go over that Broadcom on Friday in this My Trading game plan. I gave you guys this exact trend line, and I said, guys, this is a short up here between 350 and 353. It actually opened a little bit higher than that, and it sold off $20 to the downside. That was a great alert. And again, I know a lot of you guys took that trade. Congratulations if you did and you banked the money. It was a great one. But just for educational perspective, this type of price action is never a good sign. When you have a stock that gaps up and ultimately sells off, that's not mom and pops being like, oh, let me dump this stock. This is institutional selling, saying, okay, we're going to take profits. The technicals aligned with it. And just to show you another example of this, go to Microsoft on earnings, right? Microsoft on earnings opened higher and did the same thing. And look at Microsoft since then. It's been one of the weakest stocks. So in general, if you get bounces, and we're seeing a little bit of a bounce today, Broadcom is likely a short candidate for a swing trade as it's mimicking the price action of Microsoft. Okay. The dollar. Let's touch base on the dollar. The dollar continues to move a little bit lower. It's still holding the longer trend going back to 2008. And I highlighted this on Friday because this is an epic chart. This is the financial crisis, right? The beginning of the financial crisis right back here in early 08. And this began the financial crisis where the Federal Reserve in the U.S. basically dominated the global sphere of central banking and the U.S. economy, right? And what's concerning to me is that not only have you broken this zone on the U.S. dollar, right? All right. But also it's now forming a bear flag. And if this level breaks around 96.50 on the dollar and confirms, you have a major breakdown on the US dollar. And yes, would this be good for gold? Sure, it would. Now, listen, it doesn't mean gold can't pull back, but in the general scheme of the next 6, 12, 18 months, I'm sure gold will go higher. Bitcoin probably generally too, although corrections can be pretty insane on Bitcoin. But if the dollar starts to break this trend line, that spells trouble for the U.S. overall. It probably means the U.S. The economy is suffering. The 10-year yield, here we are, folks. We are right back to that same trend line here. We're reattacking it today after hitting it and getting a small bounce on Friday. The 10-year yield right now should hold this line. If it doesn't, watch out below. The 10-year yield could be headed down below 4%. My next big support line on the 10-year yield would be right in this zone here. Let me just draw this in and put it in. It's basically a zone of 3.92 to 3.82. Notice the pivot area right over here and this pivot low. That would be your zone where if this, let's say 4.05 breaks, that would be your next target on the 10 years. So listen, the yields are going lower. The dollar is breaking down. These are all things that, again, historically have been negative signs for the U.S. economy. But up until now, the market has loved lower rates, right? Because lower rates mean cheaper money. The problem is when it's associated with a weakening economy or dramatically weakening economy, that can be a negative. And by the way, that's one of the reasons why, if you look at past cycles, the stock market begins to fall when the Federal Reserve cuts rates, because anytime the Fed starts cutting rates, what is the market? The Fed is cutting rates because the economy is getting weak. Investors, because of emotion, they start to fret that the Fed has gotten behind the curve. They've gotten behind and they need to cut faster. And that's why you actually see when the Fed starts cutting rates, the market actually declines, is because the economy or the investing public begins to say, oh my goodness, the Fed's late. We're going to have this horrible recession. This is the emotion, which is a key component of trading and investing using technical analysis. So again, I just want to explain why that generally happens. All right. Robinhood today, folks, is up about 10%. They finally got added to the S&P 500. Now, this is an interesting chart, right? Because you have a chart that's off of its all-time highs of about $118. Now, for me, as a technician, I say, okay, this was an uptrend to its all-time high, and now it's pulled back. I draw my trend line, okay? And what I do is when I draw my trend line, I find a trend line here that is a fantastic gauge of where Robinhood broke down, right? And so we can see right in here, all in here, how it kept hitting and hitting and hitting, and then finally broke, okay? Now, what does that tell me? Well, it tells me that on a retrace, which is what we're getting, there's a shortable level here on a retrace to the scene of the crime at around $113. And so the idea here is that you're at about $110 in the pre-market on Robinhood. But if Robinhood today pushes up to about 113, there is a fantastic shortable, probably day trade and swing tradable level here on Robinhood. This would be called a retrace to the scene of the crime. It's something that, again, I coined that term because it's such a fantastic move back to the line, which was support, right? Support, support, support. Now it's broken and confirmed, so it becomes resistance. And again, that is classic TA, very simple. Just again, using one trend line to dictate where Robinhood should expect to run into resistance today. APP also got added to the S&P 500. So that again is gapping higher. The tricky thing with this is that it's trading at a new all-time high. This was your previous all-time high on APP. And so again, folks, what we can see here is this was your all-time high. Pre-market, it's about $13 higher. Now, with that, there is a few things we can do. We can start connecting our high pivots to see if it gives us a level. And lo and behold, the only level I have that would be shortable would be right around this, really 530, basically 535 to 540. I mean, this is about the only thing that I have. There's one more opportunity here. Let me just see. And again, I'm just doing this real time with you guys. Yeah, right up there. So right around 540. I would be looking for myself around 540 Pierce, I think. I think this trend line right down here gives us a pretty solid basis for a level. And again, yeah, right around 540-ish, give or take, on APP could be a short. This one's a little trickier. The Robinhood's very simple. When you get into uncharted territory, you don't know, is it going to squeeze higher? What's it going to do? And those type of things can be a little detrimental or make it a little bit higher risk. NVIDIA, guys. NVIDIA was down on Friday while Broadcom was up. And again, it came in. This continues to be a great breakdown on the chart. And I would just continue to mention that I still have a downside target based on technical analysis in the near term, meaning over the next 2 to maybe 3 weeks. I still think $153, former previous high pivot, is where we're headed. And then AMD today as a day trade, if it were to flush to this area here, there's a gap fill at 146.30. It's also, if we extend that line back, very key support. I'll be looking to day trade this for a long at around 146.30. Tesla, again, we talked about the wedge pattern breakout. Here's a classic retrace to the scene of the crime, except in the reverse. So remember, Robinhood, we were just looking at, that was in the process of doing a retrace to the scene of the crime in this direction where you'd short it. Well, here's one on Tesla where it broke out and confirmed and retraced, and you can see the result. It's been stair-stepping higher and looking to open higher. Tesla remains with resistance, though, between 367 and 381. So again, you can see that zone of resistance just above. And lastly, in terms of stocks, Google continues to push up. Alphabet is obviously the real name, but for me, it's always going to be Google. Google, again, trading up slightly. It is getting very extended here, folks. There is a level I want to show you guys on this. What we can do is we do a parallel. Parallels are great also for when things are in uncharted territory. And what we do is you can see, all right, well, we can't go here because price is above there, right? So what do? Well, we see a previous major pivot all the way back here. So let's bring this chart all the way back and utilize that previous pivot, which, by the way, notice 1 hit, 2 hits. And what this does is it gives me a great basis to look for where to start swing trade shorting Google. And that would be right up here at around 243 to 244. So it's not there yet, but this is a fantastic parallel channel that gives me now guidance on where, if Google pushes up into this level, let's say this week, that is going to be the level where I begin to pull the trigger on a swing short. All right, Let's flip over to gold, guys. Gold has been in the news. Gold is all the rage, and gold is going higher again today. Incredible continued strength. And again, I've been maneuvering in my GDX. I moved out for a good gain on that trade from last week. I've started to inch in on the short side today as well. Although, again, it looks like, at least I'll check out GDX in 1 second, but I'm just really trading it shorter term as it gets more and more extended. But gold today, beautiful move here. Where is this ultimately going to head? Like, where would our next resistance going to be? And I would say use the same thing. Use your parallel channel, right? So what we do here, and let's break this out here. We're now above that all-time high. We take our lows going right through here, okay? So going back to February of 2024, and we do a parallel to the previous all-time high right here. And that gives us an upside basis for thinking that gold maybe could get up to around that 3,750 to 3,800 level on this run. And again, gold continues to really defy, right? Once it confirmed above the previous high, closing confirmation, you got that real quick retrace, kind of pseudo retrace to the scene of the crime, and then it's moved up again. So really impressive move on gold here. If we go to GDX again, guys, is up a little bit. I shorted this morning and started to leg back in just below 67. It's just a starter position, so I'll be adding here shortly. But again, I'll keep you guys posted, and I'll even show you my snapshot in tomorrow's game plan if I'm still in the position. And again, I'll keep you guys posted on that. But again, overall, the miners are gapping up. Let's see what happens. We continue to put in these little dojis, which can be distribution signals, but the miners continue to stay very, very strong. Silver is inching up. It's really underperformed gold since the break up here. Gold obviously going up pretty much every day versus silver consolidating, but this is still bullish on silver. This pattern is actually looking more and more like what we would refer to in technical analysis as a bull flag here. And so again, you can see the consolidation. So you're essentially looking for a breakout above 4150. And then I still think it has a small stopping point at 44, but really you could be looking at 48 to 50 on silver in the not too distant future. Oil today, oil is bouncing just a tiny bit. OPEC announcing additional supply, but basically in line or a little bit less than was expected. So oil's getting a small bounce. Overall, I still think eventually it comes down and fills this gap. No trade here for me on this. And then look at natural gas. So natural gas, we had this good level of resistance. It kind of was above, broke, retraced, came down, retraced, consolidated, and then has breaking above. Last week, I said, if it continues up, you're headed likely for this target. So it's looking more and more likely you could be headed to 358, which would be a gap fill and this pivot high right here again. So we'll keep an eye on that. Let's flip over to Bitcoin real quick. Bitcoin today is moving up. Notice where it's right back to, guys. It is back to what we would call resistance, essentially the scene of the crime, except it's already hammered on this. And this is a great lesson for today, folks. When you have a support level and it breaks, the retrace, the first retrace to the scene of the crime is your best odds for rejection. And you can see the big red candle we got there. Then here you got a smaller rejection. Now it's attacking again. Believe it or not, the odds are starting to favor upside in Bitcoin here. Again, we'll have to see, but you now basically at a 50-50 or slight favoring of a push up above this level because it keeps on hammering on the trend line. And remember, just like a door that's locked in front of you, the more you run into that door, the weaker the hinges become before that door breaks down. And so the idea again is that we are potentially looking at maybe a break. Let's see where this closes today on Bitcoin. But if it breaks above, near-term support would be, or resistance would be 117,000 on Bitcoin. Now that turns our attention to Ethereum, which is now all of a sudden kind of underperforming a little bit. Now it did break this trend line, but ask yourself this, did it confirm a breakdown? And the answer is no, it did not. It has not confirmed the breakdown. So it could just be faking everyone out, or the powers that be could be faking it out. Until it confirms, I don't believe it is a real breakdown. And I've learned the hard lesson that way many times over, to kind of jump the gun and then be wrong on that. So let's watch to see if we confirm. It is in danger zone of confirming because it's below the line, but it has not confirmed yet. Let's watch and see today. Can it recapture this white trend line? If it does, you could be headed to about 5,000 on ETH. All right. So really interesting stuff going on here in the markets today. The big thing for me is watching the opening bell. In the first hour, hour and a half, do we see big selling coming out of the woodwork? Again, that would be institutional money trying to essentially use the exit liquidity of the retail by the dippers. We've seen that more and more lately, especially on Friday, but that's something I will be watching. All right, guys, have a wonderful rest of your day. Go enjoy, go make some money. We'll be in the live day trading room. I'll be putting out swing trade alerts in the services. Have a good one. Take care.